So in this piece, I want to talk about interest rates. It's my usual headline slide. What's going on in the market? What's going on with the Bank of England interest rates? And more importantly, what's going on with mortgage rates? So let's do just a really brief recap. So we've got, at the time of recording this, so we're on the 16th of March when I'm doing this, and Bank of England rate is at 4%. It's the 10th successive rise. Can you believe in interest rates now to bring us up to that sort of 4%? And what's going to happen? Well, Andrew Bailey, who's the head honcho down at the Bank of England, is saying, well, the jury's out whether rates might go up again in March. Now, I think it's a bit of a moot point, because if they go up in March, and I think if it does, it'll be 0.25%, or it goes up in April, okay, they're going up. Still is the trend that there's still a little bit further to go. And I still see, I said it earlier on previous updates, that there's likely to be probably 2 more 0.25% rises this year. Now, this is all predicated on what happens to inflation. Again, if you're saying, well, why are we talking about inflation? We're talking about interest rates. Go back to my January update. I expand really on why there's such a direct link between the Bank of England interest rate and inflation. So we need to understand what's going on with inflation. We know it's been really high. It's been up at 11.1%. The good news is, over the first 2 months of this year, it has started to drop. It's now down at 10.1%. Okay, we've a long way to go. We know energy costs are still hurting. We know those bills are still high. We had the budget yesterday, having to put yet more measures in place to help us right now. And so I think they've extended it for 3 months, haven't they, the support with energy. Interesting that it is just short-term support, because I think all the great and the good feel that the energy costs are really going to tumble during 2023. And that is the main driver for inflation being up over at 10%. So the Bank of England are saying that by the end of the year, let's say another 12 months, inflation will be right down from where it is now, 10.1, down to 3%. And that the reason I'm highlighting that is that the Bank of England are using interest rates also to try and curb inflation. So that's why there's a little way more to go before they can start to see that inflation rate tumble. Then I think they can pause on pushing interest rates up any further. Now, to be honest, I don't think that's too important for us in terms of the Bank of England rate, unless you're on a tracker rate, unless you're on a variable rate. Then, of course, you've got this direct link to the Bank of England, and your mortgage payments are going up every time the Bank of England blink and put rates up themselves. But that's not the majority of us. And I'm talking really to our sort of portfolio landlords who get their mortgages not from the high street banks, but from secondary lenders. And because of the way these secondary lenders get their wholesale money to ultimately package up and lend to us as mortgages, these guys are far more interested in something called swap rates. Now, again, back in January, I expanded a little bit more about what on earth are swap rates, but suffice to say, these rates are far more important in terms of their trend, whether they're going up or down, far more important to the secondary lender market than the Bank of England rate. And that's why I keep referring to swap rates. And what's been happening with swap rates in the last 3 months, so we've got the Bank of England rate going up, swap rates have continued to come down. So that's really fantastic news for us portfolio landlords, because that means mortgage rates have continued to come down, because the savings that the lenders can make as swap rates drop down, because that's how mortgages are priced in terms of how much they pay at a wholesale level, so they can pass on those savings to us. And that has continued. I did mention that it was starting in January, and that has continued in January, continued in Feb, and it's starting to level out now in March. And as I've said here, the 5-year fixed rates in particular have continued to drop, and that's been the really sort of good news. When it comes to 2-year fixed deals, that's a little bit more uncertain as to what's going on, because it's harder for the financial markets to really try and predict what's happening over the next 2 years. So there's still levels of uncertainty, which means the 2-year fix are still, generally speaking, not always, but generally speaking, are being priced slightly higher than the 5-year deals. So 5-year deals really, really good now. They're more or less, I think, in my personal view, that they've bottomed out. We might have a smidge to go, but I think we're pretty much there, which is why I've been seeing landlords now coming back and making those decisions to move forward. So here's the thing. If you have been thinking about refinancing, if you're coming to the end of your existing deal in the next 6 months, so right up to September time, now's the time to get off the fence. Start an application today to lock in that new deal. There's no downside to starting it now. But you say, oh, but what if rates drop another 0.25% in the next 1 or 2 months? Won't I miss the boat? No, you won't, because lenders are saying, look, you can start your application, get it locked in, even get a mortgage offer out on the rate today. And let's say then the rates drop a little bit further in the next month or two. Well, then we just swap the rates. The lenders allow us to put that one in the bin and jump to that slightly lower rate that lender's offering. So you can't miss out. But the good news is you've got certainty, you've got that deal locked in, because who knows what's going to happen? We only have to go back 6 months. We don't have to go back far in history to know that surprises happen. Things come out of the left field, as it did in September when Liz Truss came in and brought that new mini budget out, and all of a sudden interest rates started climbing and going through the roof, and it caught us all by surprise. So we don't want surprises. So get your mortgage in now, get it locked in. You've got that certainty, and if rates start to drop a little bit further, then as your broker, we can then jump onto that lower rate. If you want to discuss any aspects of what I've talked about there about refinancing, getting slightly lower rates, then there'll be a link to our online diary. Just book in, speak to the team. There's no commitment, no cost, and we're more than happy to give you our advice.